It is official. The Fed may be pulling back, but for Ron Paul, he says it is just way too late.
Even if they quit, let's say the conditions are such they think they could quit the quantitative easing, there's still so much out there they can't predict what would happen. So the price inflation, which is a secondary consequence of monetary inflation, is yet to come. No, I think we're in for big trouble.
Big trouble, he says, and he's here, the host of the Ron Paul channel, Dr. and former Texas Congressman Ron Paul. Ron, why are we in big trouble?
Well, because we've lived beyond our means, and the message now is that we're going to have to live beneath our means. And a lot of people have already suffered that consequence in these last 5 years. That's why the middle class is smaller, and there's a third of the population at the workforce. They're unemployed or very underemployed, and there's a greater discrepancy because some people are making out okay. Yesterday, it looked like Wall Street was pretty happy, but the unemployed aren't very happy. But this is going to continue because we have not recognized that when you get distortions from too much Federal Reserve inflation of the monetary system, that there has to be a correction. There has to be a liquidation of debt and a liquidation of malinvestment. And that hasn't happened. And that is why the recession is lingering.
The distortion that we're seeing and, you know, a lot of the income inequality and just the discrepancy in the way people are living right now, why is that caused by the Fed? Why is that caused by inflation?
Well, the Fed's the vehicle. It's the monetary phenomenon and the philosophy. Because when you undermine the value of a currency, you destroy the value by increasing it. And prices and different things will go up, and it disturbs choices. So once you interfere with the interest rates, people make bad choices. But basically what happens is that Wall Street and big business and the banks and governments, they get the money first. And so they don't suffer the consequences. But when the money circulates, then the poor and those on fixed income suffer the most because their inflation rate is much greater.
So
but then when you have a recession,
I just want to make sure we follow you through this logic. I mean, so are we in that in-between stage? Because, of course, when you measure inflation right now, I mean, we're at the point where it's dangerously low. I mean, that's one of the concerns that the Fed has right now is that there's no inflation. So are we in that point of the argument that you were making that the banks and the wealthier individuals have already had the money, but it hasn't gotten the velocity and the traction and filtered out to everyone else yet?
Yeah, but the average person that's trying to start a business and create new jobs, that hasn't happened. There's been a distortion.
Right.
The money goes and stops in the bank, and they put it back in the Fed and reserves, and they get paid for it. So the whole thing is distorted. But I would argue the case that the strict definition, according to Austrian economics, is just increasing the supply of money and credit is the inflation. And then sometimes it's measured by the CPI. Sometimes it's measured by soaring stock prices. Sometimes you have housing bubbles, so you don't know where the money goes. Yes, the Fed can create money, and they claim they can create more spending, but they don't know where the spending is going to be. Right now, there's a lot of disturbance because a lot of the spending is going into medical care, you know, and education. So it's the distortion they can't control. They can say, well, we'll create money, and the people will spend it, and that'll get us out of recession, and it does more harm than good because they don't allow the mistakes to be corrected. So all the mistakes that were made leading up to the crash of '08, they're still out there. The debt has not been liquidated. Debt is much worse, and the malinvestment still sits out there.
So you're saying that inflation is already out there because in the strictest terms, the money is already circulating in the economy. They've put it out there, that we haven't seen strict price inflation in the way that we would normally expect it. You know, for example, at the grocery store, oil prices are down. But we are seeing an asset inflation, the stock market and the housing market as well. What's the danger of that?
Well, there will have to be a correction. They'll get out of sync with what it should be. I mean, in the 1920s, this was the same argument they made. They say, cost of living is not going up. CPI is okay. And yet there was a lot of new credit in the 20s, and there was distortion and gambling and a stock market bubble. And then there had to be a correction. So, yes, that is happening. I mean, you can't argue that the bond prices are low. Interest rates are low, but the price, technically speaking, is very, very high. And same way with stocks. And the financial community likes what happened yesterday, so they did a lot better. But today we also had a jobs report that wasn't all that encouraging.
So does it eventually turn over to prices for food and other things as well? And where's the velocity?
Well, the philosophy is still in the financial sector. Yes, I would say it will. I would say it's there more than they recognize. If you use the CPI as measured before, it would be much higher. The free market economists have measured it, and they claim it's closer to 6%. But they change the way they calculate it. But everybody's a little bit different. If you're on a fixed income with Social Security, and they say there's only a 1% inflation, and they don't get much increase, and they have medical care costs and repair bills, I mean, they might be struggling with an increase in cost of living that is much greater, but nobody recognizes this, or they don't pay attention to it because they don't have a strong enough lobbyist. So, but no, a lot of people complain to me when I'm out campaigning on the road and speaking. Yes, their cost of living is going up, and they are suffering from the consequence. What about the demand right now has been very, very great for the increase in the minimum wage.
Right.
I don't want to deal with that
Right.
subject, but why is it? Because they don't have enough purchasing power, and they're justified in complaining about this. I mean, raising the minimum wage law, that's not the answer, but they're hurting.
What's the answer? What's the answer?
Well, having sound money and no inflation, get rid of the Fed creating this business cycle, because this is what you should expect. They will suffer, and certainly the middle class has not benefited in the last 5 years from the so-called Federal Reserve activity in monetizing debt and QEs. That hasn't helped at all for the middle class.
Okay, don't move. We've barely gotten started.